Joining us right now is Sarah House, who is senior economist at Wells Fargo's Corporate and Investment Bank, and Greg Branch, who is managing partner at Veritas Financial Group, also a CNBC contributor. And welcome, both of you in studio today. Great to see you.
Great to be here.
Yeah, Greg, I don't think I've ever sat in studio with you before.
That is true. That is true. I'm here for you guys to pummel me in person.
No. Let's talk about this. We've been talking this morning about this unbelievable continued run for the markets. S&P 500, Dow, especially the NASDAQ, but just what we have seen over time, defying any of the concerns that have been thrown out time and time again. You have not been bullish at the beginning part of this year. Do you look now and say, okay, it's time to pivot? Because you talk about the Fed pivot. Is that time to also pivot from a market perspective?
Not at this juncture, and I don't really believe that the Fed has actually pivoted. I think that they've paused for good reason. They're trying to estimate how much of the work they have to do versus how much of the work the system is going to do organically. And so we know that liquidity is being pulled out of the system at the bank level. We know that from the SLOOS report. We know that from channel checks. Banks aren't lending as much as they used to and at the rates that they used to. So the Fed is keeping a watchful eye on that. It is keeping a watchful eye to see if there's any other systematic risks in the financial system, which I do believe that there are. But if you want to get to 2% inflation, which is their stated goal, we're not close to that yet. We are at double that rate. Core has grown by 30 to 40 basis points month over month since October. And so I think Jerome said it best when he said the measures that they've taken thus far hasn't had a meaningful impact in terms of getting them where they want to go. As long as that's the case, I see further Fed action. I see another 100 basis points. I see a terminal rate over 6%. Consensus isn't forecasting that. Consensus has 10% growth in the fourth quarter. So until I see consensus align with the realistic macro scenario that the Fed is painting and the actions that they have to take, and until I see us through the other hiccups that I think are in store for us with the financial system, I have to remain bearish.
How hard is it to maintain that conviction as the markets keep going up? And what do you hear back from people?
Well, let's just say I'm not everyone's favorite commentator right now. And admittingly, just like in July of August of last year, I've missed this rally. But my outlook tends to be more long-term, 6 to 12 months and very macro-based. And so while I wasn't necessarily happy to miss the rally, the difference here is that, we've been paid to kind of wait out in the short end of the curve where we're getting a 5% yield. And so it hasn't been as painful as last year, even though it's been longer in duration that the market's been rising.
But why do you think inflation is going to be so stubborn? As an economist, do you feel the same way?
Yeah, I think it will be still pretty sticky as we move forward. So I think there are certainly some disinflationary pressures that are mounting, and I think we will see more meaningful improvement here in the second half of the year. But I think there's a big difference from getting, to 4.7% on core PCE to we're estimating 3.7 at the end of this year, all the way back down to 2%. We think that last percentage point is. I think implicitly they'll be comfortable once they get below, maybe not quite 3, but 2.5%. I think if that means staving off a recession or at least mitigating the damage, I think they can live with that for a time. But I don't think they're going to give up on 2% over a more prolonged period.